I want to shift back over to the market action we're seeing play out here today as the rally here, I should say rebound, continues. The Nasdaq only up by about 0.5% after tech got shellacked. It was performing weakly again today, but at least inflation fears seem to be assuaged a bit based off the CPI numbers we got this morning. And for more on that, I want to bring on our next guest, Kevin Simpson, joins us right now. And Kevin, I mean, when we look at this, how are you, I guess, taking today's moves as an indication of where we go from here? We've been talking about this rotation away from tech, but might be too soon. What's your take?
Hey, thanks, Zach, for having me today. Markets are on a tear, and it's a great day to be talking about tech stocks for sure. You know, as we ended February, tech stocks were certainly a little frothy, certainly a little overbought, but I think the sell-off did just the opposite. I think we were a little bit oversold and there was a lot of value there. If you think about tech names, they're always going to be much more amplified in terms of their moves, whether it's up or whether it's down. But I think the one takeaway that we want to look at here from the big name techs is that they're absolutely investments for the long term. And anytime we see weakness in them, we want to add to them. I've been looking at Microsoft and Apple, been adding those to the portfolio. We've been looking across the table at Amazon and Google as other names that are just incredible buys whenever you see weakness in them. These are long-term wealth creators, and we're very, very excited anytime we get opportunities to put money to work.
Kevin, what about a name like Tesla added to that list? Is that a company that you think should be held long term? And we've seen such a dip over the last several weeks with the sell-off. Do you lump that in with the Microsofts and Apples of the world?
Well, Aikiko, if you have a really long-term approach with the electric vehicle play down the road, you have to look at those names as long-term investments. We're not investing in Tesla. It's not a stock that has quite the revenue base that we look for. So we're going to opt for things that are maybe a little bit more on the conservative side of that big tech ledger. But whenever you see a stock that goes down 20% plus and you have that kind of management behind it, I think you can feel comfortable taking a little bit of an opportunity to buy it.
And Kevin, I mean, when we think about expectations for the rest of the year, obviously today, financials a standout, and some of those other cyclical names we've talked about that have gotten beaten down. I mean, how do you fit those in with the relative risk reward now in tech? Because we have been hearing a lot of people talk about the opposite of what you're saying in terms of opportunities for some of these big tech names, given that some of these other names levered to the reopening might advance a bit more. So how should you grapple with kind of that risk reward trade-off?
Yeah, Zach, I've been hearing about that rotation from growth into value for a long time, and my portfolios have a more value tilt to them, so it's always music to my ears. But the truth is, I just don't think we're ever going to see that happen to the extent that we've done in the past. And just a real funny example is I have a refrigerator that is now connected to the internet. So when you think about the growth names and how technology has just integrated so many different aspects of our lives, it's a play that I think is always going to be growth first, value second. Now, to that end, it doesn't mean that you don't want to have a well-diversified portfolio. We talked about some big tech names that I think are attractive and certainly you can buy on the dips. But on the other side of that ledger, if you think about where we're headed as an economy, we've got the stimulus package coming this week. That's going to be backed up by a big infrastructure spending plan. Consumers are going to be spending like mad when we reopen this economy. So you've got Americans spending, you've got America spending. And if you look at infrastructure stocks, you know, we have one eye on some of the big names that were a little bit more on the value side, looking at Caterpillar, looking at Union Pacific. So if you think about the conversation we're having, in the same discussion, we're talking about Union Pacific, a railroad, while we're talking about Google and Amazon. You know, if that's not a bullish conversation, I don't know what is.
Okay. Nice to get some optimism in the conversation in the markets. Kevin Simpson, founder and CIO of Capital Wealth Planning. It's good to talk to you today.